Hello again, everyone. And I know I've been gone for a couple weeks, took a vacation last week, but I am back as we head into September. So big month. September normally is anyway, and the market can be very active. Volume should be returning this week and next. And then over on September 18th, let me double check that. Yes, we will have a Fed announcement that all eyes are on. Many in the market expecting a half-point cut, probably end up being a quarter-point cut, I would think. But between now and then, they'll be watching for anything that the Fed says regarding that. This week, we do have a big number coming up on Friday. We have the non-farm payrolls with unemployment rate. So that will tell us a lot about how the economy is going. Most likely they'll revise the numbers before. It seems like, I think they say 2 years straight, every month they put out a jobs number that's better than it was. They revise it down. So we'll see what happens and how the market takes that. So as we head into that, let's go over here and look at the chart. So the SPX ran up here near these all-time highs, and now we're just in a channel, as you can see, along the way. And I'm sure we'll be tacking around here until that Fed decision comes out, or at least something really affirming it. So, or not affirming it. Either way, that will be coming up here. So also we have a VIX that's right at 15. So this week, what I'm thinking, unless this is Sunday, of course, the market's closed tomorrow, Labor Day, and we'll be back, the market will be open again on Tuesday. So what I'm thinking here is a trade I call the all put flat fly. By the way, it doesn't have to be puts, it could be calls. But this trade is set up 35 days or more from expiration. And before you turn off the video, no, you're not going to be in this 35 days. Very rarely have I ever been in this trade in expiration week. I know it sounds ominous to those because, in today's world, people like shorter and shorter and shorter time frames. This trade, you'll probably be out of in 7 to 10 days unless things really go haywire. And what it affords you, if you just look at it here on the screen, the reason why it's called flat, look at this daily profitability line. Very, very flat. Why do we do that? Well, we want time decay. As you can see, it's positive about $6 here a day on time decay. So what we want is this thing to be able to move around day after day while time decay just keeps coming into our account until we get like an 8 or 10% profit based on what we paid for it, and then we close it. Now I set this trade up usually right at, or you can do slightly below where we're trading. So we closed on Friday at 56.48. I just modeled this one with a 56.40 center. You could do 56.50, but then I went up 60, down 70 for the other wings. And what this does for you is look, even at the upper break even where we'd want to take some action, maybe add another complex to give it more room, you're down about $25 a contract. Lower break even, you're only down about $7 per contract. So what it gives you is the ability to have a trade on that if I put this on Monday and wake up on Tuesday and something, or put this on Tuesday and wake up on Wednesday and something crazy does happen and we go maybe 100 points up or down, no doubt you'll be down, but very little. And you can just take the trade off. If you did this trade shorter term and that happened, you would really get stung. Let's just take a look at that real quick. So let's say I just did it for the 20th. Much more damage you see out here. See how much I'm down if we maybe went up to 57.50, I'm down $200 a contract. Whereas if I do this the way I did it, which you want it to be 35 days or more on a Friday, so I had to pick the 11th, that's the closest we can get, which is 40 today, and that'll be, I guess, 38 on Tuesday. You can see at 47, look at that, you're only down $68 at 57.50. So that's what I like about this trade. It lets us trade. It lets time decay come into our account without a huge risk of ruin, as they say, a big loss. Now, this trade has a small debit when you do it with puts, $3.80 it's showing here. But there is margin with it because brokerages do margin asymmetrical put butterflies, asymmetrical, meaning that one side, the longs are closer to the short than the other. They measure that, they margin them as a debit and a credit spread. They don't do that with calls, but they do it with puts. So you have 980 plus 380. So you have yourself around $1,400 something trade. Now you could just do this with calls. And what do you have? About a $1,400 trade, but it's all in the debit. It can be done either way. It doesn't matter. You don't really save anything generally by doing one or the other. If you find one slightly cheaper or more expensive and you want to, go right ahead. It doesn't matter what you do there. It's just something to be aware of. Now, also, you could do this trade in SPY or any of the S&P products, even in ES, but I'm going to show you SPY. I'm showing you SPY here because it's 1/10 the size of the SPX. So if a person ever wanted to do this live, they felt it was right for them, they were comfortable with it, they traded it on paper, and are ready to do something live, you could do this in SPY much, much cheaper. Look at this, about a $47 debit and $98 in margin. So about a $150 trade. That's the most you could ever lose, by the way, in one of these trades is what you pay for it, whether it's in the SPX or the SPY. So that's the good thing here. When you put it on, you know what it is. It's not going to get away from you and be much, much, much worse than you ever knew it could be. It's going to be, at the worst, if you lost the whole trade, was a complete loss, you'd only lose what you paid for it. So you can do this in SPY, manage it the same way. You could do one contract, a few contracts, whatever it may be. And then whenever you get comfortable with it, if it works for you and you feel like it's right for what you're doing, then you could move on up to the SPX where you only have to buy one contract for what you would have had to buy 10 of in this SPY. So you save money on fees, of course. So this is a trade I'll be looking at this week. I think butterflies do make sense as we're here. Now, of course, as we come into Tuesday, we'll see if the market would happen to go really crazy. We have a huge vol spike over 20, or we go up 100 or something, and we maybe not do this. But if things just kind of stay around this area, this is the trade I would be looking at this coming week myself. Try it out on paper, follow along, and see what you think of it. That's really the best way to start a strategy, is do it on paper so that you don't have real money at risk, just so you can see how this progresses and how it could work for you. One other thing, folks, I wanted to let you know that I do have a Labor Day sale going on all my courses. I'm going to put a link in the description of this video. And what this does is all of my courses will be $50 to $75 off. You can buy all three of the courses I currently have, $547. But that offer only lasts until midnight tomorrow night. Labor Day night at midnight, the sale's over. But you might want to check that out. It's a great way to get the courses at a deep discount, either one or all of them. I do appreciate your attention on those. And also, you can find out all the other things I do in the links over at arimer.com, where I'm at every day with an opening bell where we look at what's going on in the market, look at trades, and a Trader's Lounge help desk where we look at live trades and help people with trades 2 days a week over there. So that is coming up on an end, this sale at tomorrow, Labor Day, that is, at midnight. So until then, you can buy the courses at a great discount. Well, I appreciate you showing up here today, folks. Please hit the like and subscribe on the video. I will be back next week. We're going to get back into the swing here. A lot going on in the fall, rate cuts, presidential elections. Who knows what the market will have in store. So have a great trading week, and I will talk with you guys next week. Bye-bye.